The 200 moving average. Wow, it's so important. We're going to talk about it a little bit here. You might have seen a video I just put out where I went through the computer back testing to prove and discover how important it is. But let's talk about it a little bit from a high-level fundamental perspective. By the way, welcome in. Fam, much love, Trav here. I'm on my way to go play basketball. And wanted to talk to you briefly about the simple moving average, why it's so important, the 200, the daily. And in my trading study, it's something that I've come across from time to time. And Mark Minervini is a guy who, for instance, he was a national trading champion, and he said that, I've got my car beach right here, everybody chilling, yo. Yeah, Mark Minervini said he doesn't trade under the 200 moving average. He's a long-only stock trader. And that saved him from losing money in bear markets, but also it caused him to be sideways or flat for long periods of time. But anyways, I did the computer back testing, and I found that it's not great to buy breakouts under the 200 daily moving average. And the 200 daily moving average is just a line of the last 200 days on average. And you could use the 200 EMA or the 200 SMA, it doesn't matter that much. But I found breakouts under the 200 SMA are compromised, and dip buys under the 200 SMAs are to be avoided entirely. So one of the systems that I have back tested, or the setups, is dip buys on a high time frame, buy and hold for Bitcoin, ETH, gold, silver, NASDAQ, S&P 500, stocks, Amazon, etc. And buying under the 200 SMA is not good. Buying dips. And the reason why is the drawdowns it causes you to experience. You'll catch the bottom eventually, but you lose too much money along the way. So, I mean, think about this. Even the best assets have really long and crazy bad drawdowns. Bitcoin has had 90% drawdowns. But you think, well, that's just Bitcoin. The NASDAQ had an 84% drawdown from 2000 to 2002. The Japanese stock market drew down over 90% from the 1990 top that it only came back and reclaimed this year. It was underwater for 34 years. Even gold has had some 90% drawdowns. So all those 90% drawdowns happen under the 200 SMA, and they can take years. And if you're trying to buy the bottom, you take so many losses on the way down. And you could, okay, well, I'm gonna just sell it for a quick scalp. But then it gets you in the habit of selling things for a quick scalp. Where what you want is, when things are really trending, to be buying and holding the gold and buying and holding the Bitcoin. So you can buy dips, but you want it to be in a strong uptrend and a sharp correction. Consolidation, take the old level. You can try to buy the dip there. But once it's broken under the 200 SMA, it's not in an uptrend, it's to be avoided. And that takes patience, man. I mean, it sucks to be like, oh, I'm not going to trade Bitcoin for the next year, possibly. Yeah, well, maybe you trade something else, or you do something else and you touch grass, Trading isn't always about making money. Trading is also about not losing money. And the 200 SMA filter for not buying underneath it is not here to help you make money. It's to help you save you from losing money. So, hope you found that useful. If you want to see the back testing, there's a link to my system down below. Guys, I don't know how long this cough is going to last. It could be months, man. It's so bad. Allergies, man. Allergies is what it is. So sorry about it, but man, I just have to keep making the videos, and I'm not going to take antihistamine medication every day. I'm just not going to do that. So here we are coughing. Anyways, don't fade the SMA. And I'm making this video because, yeah, it's just it's so tempting to buy dips, but a lot of the time it'll work. But the problem is the times where you enter a 1-2 year bear market and you could have just done nothing and done something else with your life and your money, but instead you're buying the dip all the way down. Better to do nothing. Much better to do nothing. So always keep the 200 SMA on your chart. If price is under it, do not go long. That's my recommendation, and that is from computer back testing, going back 100 years on gold, 40 years on NASDAQ, the Nikkei, the S&P 500, 10 years on Bitcoin and ETH. Yeah, just do something else with your time. So anyways, hope you find that useful. Much love, and I look forward to talking to you soon. Peace.